you're employed, you may be putting some money aside to save for a rainy day, but investing could be even more beneficial. TV 20's Shauna Kalafi is live in studio with a financial expert to tell us why you should focus on investing rather than saving.
Good morning, Haley. I'm here with James Virgilio. He is a financial advisor based here in Gainesville. Thanks for joining us this morning, James.
Well, thanks for having me.
So last time you were on, we were talking about tax season, but now it's the time of the year that a lot of students may be graduating college and getting into the workforce for the first time. And the age-old saying that we always hear is that you have to save some of your money, put some of that aside for a rainy day. But you were telling me earlier that it actually might be more beneficial to invest a lot of that money rather than save it. So tell me why that's so important for kids that might be just going into the workforce.
Sure, the temptation is to wind up saving any amount of money, 5%, 10%, whatever it may be, and then putting that into a cash-based savings account. And that's not going to be good enough because of things like inflation. You'll wind up actually losing purchasing power year after year after year. So when saving for retirement, you actually want to invest for retirement. And the proper amount is at least 10% of your gross income. So if you make $50,000, you want to save $5,000 a year at a minimum so you can provide for your future retirement.
And how does that apply to older folks that maybe haven't been investing all this time, who now maybe want to start investing? What percent should they put aside?
If you're in your 50s and you've saved nothing, which 1 out of 2 Americans actually have nothing saved for retirement, you want to save as much as 25% of your gross income, and you're also going to need to delay your retirement until at least age 70. So the scale just begins to push out longer and longer and longer with saving and investing more and working longer.
And you mentioned that number 70 that it might be pushed back to, but actually one of those categories may be people who are age 65 and above. So if they're on the later spectrum of that, how does this apply to them?
It's really, really important to save and invest for your future, because if you get into your 60s and you have nothing, it's highly likely that you will have to continue working really forever. There is no way to save enough amount of money at that point in time and invest it to have it grow to where it can provide for you on its own. So it's imperative that if you are young enough to begin to address these needs, that you invest your money as soon as you possibly can. And that means as soon as you're making an income.
And we'll be talking more with James coming up at 6. We'll have a lot of more tips, and of course that apply to people of all ages, from people just getting into the workforce to maybe some older people looking to retire soon. So we'll be talking more with you then. For now, I'm going to send it back to you, Haley.
All right, some good advice. Thank you both.